It's the interview series. The interview series. It's the interview series. It's the interview series. The interview series.
Welcome to the interview series, where the mission of this podcast is to add value to as many people as possible. As a realtor, investor, and consumer, I know firsthand that there's a lot of information out there and not a lot of time to verify it and consume it. So I created this podcast to ensure you have the resources, information, and knowledge to assist and alleviate any stress as it relates to real estate, finances, and more. With that being said, let's jump right into it. Today it's an honor to introduce Laureen Barnes, mortgage lender, right? And I mean, a couple of things about you that I want to highlight here. You've been in the business for over 30 years. You're currently with RCU, or Redwood Credit Union, for the last 6.5 years. So you kind of grew up all over, but Sonoma County is your home because you've been here since high school, right?
Right.
Beautiful blended family with 4 children between the ages of 22 to 29. So I mean, I have an 8-year-old daughter, so you're a little bit ahead of me on that one. But any advice on me on how to raise her?
Enjoy every day.
Enjoy every day.
And it does keep getting better, I promise.
It's good to know. I'm just starting out, it feels like, but yeah, it's awesome. So
it is.
And you love to travel, staycations. Obviously, Sonoma County is a great place to be.
Absolutely.
People travel around the world to come here, so it's an awesome place to call home. So
very lucky.
Very, very lucky, which is a great reason why people should buy homes here, right? So let's just dive into it and just start at the beginning. For viewers out there that don't know, like, the difference between like a lender and a mortgage broker, like what would you say the difference would be?
Such a great question, and it can be very overwhelming, I think, for home buyers that are out there looking, where do I go? Who do I talk to? So mortgage brokers have the ability to, they take your application in, they take you all the way through funding, but they have the ability to shop your loan to what we call different investors. So they sell that loan to an investor once the loan is funded, and they underwrite or qualify, if you will, to the guidelines of that specific investor. It's a great opportunity. They can kind of farm it out where it needs to go. A lender, per se, like Redwood Credit Union, especially a community-based lender, will have the same access to investors, but they also will fund their own money and their own loans, called portfolio lending. So they're not relying on an investor to buy a loan. They're not relying on other guidelines, so they can step outside the box and really listen to a home buyer's story. What are your goals? What hurdles might you have had? How do we get outside the box and really look at, we want to get people into home ownership. So I think with a lender, you've got a little bit more access to outside the box thinking. They're lending their own money, and they're really wanting to contribute back to the community to get people in homes.
Got it. And I think,
as do brokers. Sorry, I should say that.
For sure. I mean, I think, when you look at it from a consumer's perspective, there's just so much information out there. So it's like, what's the difference? So thanks for breaking that down. In conjunction with that, like, what are the benefits of choosing a lender as opposed to a broker?
Sure. So speaking for RCU and other local community type lenders, as I mentioned earlier, we've got our portfolio lending. So I think that one of the key pieces is that we do step outside the box. We do listen to a member with Redwood Credit Union, but a home buyer's story. We can make decisions based on somebody's story, on their ability to repay. Maybe everything doesn't line up, but we know that it's a good situation and we can go ahead and move forward with that. The other thing is that we retain what's called servicing. So when your loan funds, you then have your monthly mortgage payments. You might need assistance with something. Maybe you want to refinance down the line. We hold that relationship and we don't sell it. So you're not wondering where you're going to make your payment. Sometimes when loans are sold, you might get 2 or 3 notices within a year, sometimes every month, that your servicing has changed. You're trying to keep up with where you're making your payments, right? That's a big inconvenience. With auto pay now, you've got to set it up each time. So I think really just maintaining that relationship. Somebody can walk into the door of RCU at any given time throughout the life of their loan and say, hey, I need help, or I'm not understanding this, and we're right there to help them. So I think that might be the difference with a lender, if that makes sense.
Yeah, it does make sense. The key differences, and you kind of took me back. I didn't want to cut you off there, but it's like, I remember a few times in my, the homes I purchased, right. I'm like, who is this? What is that? And so, I didn't think through that. Like you just kind of articulated that, you have over the life of the loan, you have not only know who it's going to be, but you can also walk into those doors. So, I appreciate that. And kind of transitioning into that. So, as a realtor, I have clients, and I think there's a joke going around that I heard recently where if you walk outside, you throw a rock, you can hit a realtor, right? So the same thing goes for lending, right?
Yeah.
So like everyone has to have their process, and so I'm going to ask you like what, not the lending process step by step, but what's Laureen's? Like what's your step by step when you meet a client, when you meet someone that for the first time or an existing client, like take us through from A through Z. Like, what's your process? What do you tell them?
Sure. I try to break it down and really understand, where our home buyer is, where are they in the journey. And I always think of qualifying and, getting into a loan as 4 legs of a chair, right? You've got your credit, you've got your income, you've got your assets, and you've got your property. You really want all 4 to align. They don't always align, but that's your goal. So I think, your first step that we do is we want to meet with that home buyer. We want to be able to find out what are your goals, what are you looking to achieve, what are your timelines. Really make sure that we set them up for success, and just explain from A to Z what it's going to look like. Once we understand their goals, where they're comfortable, what their timelines are, we obviously take an application in. We do some document gathering, pay stubs, assets, different things like that. And we really want to work to get them pre-approved. That's our main goal. So as long as they're not in contract yet, get them pre-approved, set them up for success, let them know exactly what they're looking for, then they go out and they shop with confidence. At that point, they come in when they've got their contract. So they've met with XYZ Realtor, they're so excited, they've gone out, they've shopped, they've executed a purchase contract, it's been accepted. We then will, review contracts, any kind of inspections that are being done, and then we do what's called evaluation of collateral, so an appraisal. So we will order a third party to come out and appraise the property. And then once we get all that documentation in, we send it over to our underwriting department for loan decisioning, and then we satisfy any pending conditions that might be needed, and then we order loan documents. Home buyer gets a stack about this big, and they meet with title, and they go in and they sign their loan documents, and we get the loan funded.
Nice. That's a good breakdown. It's awesome.
Yeah, is that?
Yeah, this not your first rodeo. I love it. Like
Not my first rodeo.
You know your stuff, and I think that's important when you're educating your clients. They need that breakdown, right? Because
it's daunting.
It's daunting. There's a lot of moving pieces, right?
It is.
I want to kind of fast forward to after everything's done, because this is kind of maybe more for me, like what are the consequences of paying off your home early? Are there consequences, or is that a benefit, or like recommendations to avoid any potential penalties? Like what's your experience on that?
Contact your CPA.
Yeah.
You don't know if there's consequences per se. I think that back in the day, loans had prepayment penalties. That definitely could be a consequence. I don't see those so much anymore.
Okay.
I think, it really depends on the financial health and the financial goals of that individual. Certain people really need that cash flow improvement. They're coming up on retirement, or they're coming up in a change in life, and being able to pay that loan down or off makes a night and day difference, right, in their monthly income and their monthly outgoing. Other individuals need the tax write-offs of mortgage interest. You might be looking at life events or different things that you're wanting to do, and when you pay that loan off, then you're going to be borrowing against higher interest rates. Rather than using that, the lower interest rates for money, right? You're borrowing money at a lower rate. But you can also refinance down the line if you need to access funds. But I don't think there's any consequences, really. I think it's just what's right for your situation. We always recommend, talk to your CPA. Make sure that it makes sense to pay it off, or would you rather take that lump sum and put it somewhere else, or reinvest it into the property to do something to it?
I'm glad you brought up CPA. I think ultimately, like, there's a team of everything. You have a realtor, you have an escrow officer, you have a lender, and even a CPA can kind of be that part of your team when you're looking to build wealth through real estate. So it's always consult a professional, right?
Absolutely.
When it comes to that. And you also, like I said, you mentioned refinance. Why is it? I mean, for those that don't know, why is it beneficial for a homeowner to refinance?
Oh God, there's so many reasons. I think first and foremost, we hear rates drop.
Yeah.
People want to refinance and jump on, I'm going to get a lower rate. Right now, so many people have first mortgages and what's called a second mortgage. And a lot of times they might want to blend those together. So put them back into one loan and get what we call kind of a blended rate, where you're looking at both rates, taking them together, and hopefully improving monthly cash flow. And then there's just so many other reasons. You might want to expand your real estate portfolio and pull cash out of the property that you own. You can do that through a refinance. So if somebody's looking to buy another home, they're looking to consolidate higher interest rate credit cards. Maybe they have a life event. They have college tuitions coming up. They have weddings coming up. You know, lifetime of a or trip of a lifetime, right? Something that they have coming up. They want to upsize or downsize. Maybe they don't want to move, so they want to do something to their property. Refinancing is an excellent option. Being able to either pull cash out or improving the current terms of your loan. But we're always very mindful when we talk about refinancing that you want to watch that equity position. You don't want to, if you're pulling cash out, you don't want to max out. Markets can shift, equity positions can shift. So we always want to make sure that we're consulting and really finding out what their goals are. But lots of reasons to refinance.
All right, so circling back to the refinance, can you kind of dive a little deeper into like the costs that are associated and maybe even the process as it relates to refinancing?
Sure. Similar to a purchase, we gather documentation, application, qualifying for a borrower's request, whatever it might be for the refinance. Cost involved, want to keep it loose, but it's usually about $1,500 to $2,500. It can be a little bit, higher. That's cost. That's closing cost, and you also have points. So I guess I should take a step back real quick. With any loan, you're going to have points and closing costs. You kind of buy your rate, if you will. It's the easiest way to explain it. So if your rates, if you take a little bit higher rate, you might have a lender credit or no points. You can buy your rate down, and sometimes you have points. Certain brokers or lenders might charge points for loans, so you always make sure that when you're talking about a refinance or any type of loan and you're looking at closing costs, that you really compare apples to apples when you're out there shopping, when you're looking at things. But for a refinance, anywhere about to $1,500, $2,500. Higher loan amounts, investment properties might be a little bit more. One of the things that I love at RCU that we offer for our portfolio products, those loans that that we funded personally, or through the bank, we have a rate roll down. I think I mentioned it earlier, and it is that as long as you're not changing loan terms and you're not needing any cash out, it's a $300 fee. We will roll your rate down to current market rates. And instead of going through the whole refinance process, qualifying, all the document gathering, all of that we don't need to do. We don't need to do an appraisal. We've already got the collateral. So we prepare one document, one signature that's needed, $300, and you can roll that rate down. So really a wonderful process. Yeah, it definitely saves money. It saves time. It saves a lot of frustration. Makes it really easy, and you get the benefit of current rates, which is nice. We also have a streamline option, which again is in lieu of a refinance for those loans that are with one of our portfolio products. And you can move around our adjustable rate products, and it's a $750 fee. And anytime throughout the life of the loan, you can move around within the adjustable rate mortgage product family, if you will, and refinance. So maybe you chose a 10-1, which means it's fixed for 10 years and then it can adjust every year thereafter. Anytime within that time frame, you could say, you know what, I want to reset that. Or maybe I want to go to a 5-year now and reset that rate to take advantage of current rates. Again, you can skip the whole refinance process with RCU and literally just do a streamlined refinance, sign a document, and have your refinance completed, if you will.
Well, this is some key benefits. I love it.
Yeah.
I love it. Earlier you mentioned, from a lender's perspective, I guess my question is, what are the benefits of going community first versus like a nationwide affiliate like Wells Fargo?
Great question. So when you talked about, I think we started off by saying mortgage brokers versus lenders. And then yes, when you get into lenders, what lender do you choose? And there's a lot of big name lenders that you see on TV and whatnot, and they're nationwide. They have great benefits to them. But really breaking it down and going to a community lender such as RCU, which is actually a credit union. So we're there for our members, we're there for our community. You're going to have a lender that is going to have a long-standing relationship. We work for our members, and we know our local communities. So when there's disasters, when there's times of need, when there's a personal situations that happens with one of our borrowers, with one of our members, we're going to take a personal approach at looking, how can we help you? How can we support you? Rather than being an 800 number that you call into, you don't really have that relationship or that connection. I mentioned earlier that servicing can transfer, so you might be sold to different lenders. You're always going to have that relationship with Redwood Credit Union. So I think any community lender is going to offer you that. We take great pride in serving our members and really making sure that we're always looking out for their best interest. In addition, when you work with a credit union such as Redwood Credit Union, you also get additional membership benefits. So not only are we helping you with your home loan, we're also looking at your overall financial health. And we might find opportunity to refer you to our consumer department to refinance that auto loan, right, and get a better rate. We might be able to get you over to our financial wealth department and look at your retirement planning or your future health that you're looking at there. We have insurance services. We have so many different entities that we can help you with, that I think having that community-based lender really is there to do overall financial health for you, and really be able to be a partner in the success of that long term.
Yeah, and you say partner. I mean, as you're talking, I'm like, I feel like as a consumer, it's incentivizing me to want to join community, because I'm thinking family, right? I feel like I'm joining a family that's someone that has my back, and so with a purchase as large as a home, right? You want to look at someone that really is looking out for your best interest. So. Definitely some benefits when it comes to community first. So thank you for the explanation. I really appreciate it.
You couldn't have said it better, and I think that's truly it. It's just it is that partnership and knowing that someone's going to have your back down the road. So so I've been at Rotary Credit Union for 6.5 years, as you mentioned, and truly it has been it's taken me back to the early 90s when I got in the business, that it really is about the borrower. It really is about doing the right thing, and looking at that situation, whether it be getting the loan or down the line. How can we make sure that the member is benefiting? How can we make sure that your best interest is, always top priority for us? And I think that's part of a credit union movement. So whether it be Redwood Credit Union or somebody else, we really look at those community lenders.
So refinance is one tool on how people can maybe borrow a little bit of money from their home. What are some other tools?
Sure. So you can redo a first mortgage, which is a refinance. Okay. You also can access a second mortgage, even a third mortgage in some cases. And what that means is you have your first mortgage, then you're putting a second mortgage behind that, and that can be a fixed rate second, which means it's a fixed term, it's a fixed rate, and you get the lump sum of the funds that you're borrowing all at once, and you start paying on that amount just like you would a first mortgage. Then we also have home equity lines of credit, and those work very similar to a credit card. You've got a line of credit or a limit, if you will, and you've got a draw period, and you're only paying on what you use. So if somebody, when someone comes to us and they want additional funds and they don't want to touch their first mortgage, we'll offer a second mortgage to them, and then we find out, what are your goals? Are you looking for emergency funds or maybe something down the line? Home equity lines of credit are great for that, right? Because you're not paying on funds you're not using. You only utilize them when you need them, and then you only make payments when on that balance that you have. If somebody's going to be doing construction within 6 months, or they're going to be doing something in the near future, and they're going to utilize all those funds at once, it makes more sense to lock that up in a fixed rate second, and have it all at once. So.
Yeah, I mean, that's a good breakdown. I mean, all the reason why it's important to sit with a lender to kind of go over whatever options and kind of work from where they're at, because every situation, every scenario, every family and person is different, right?
Yeah, absolutely. And you talked about, lenders and mortgage brokers, and I think really no matter who you choose or which way you go, it's really finding somebody that's not going to just say, okay, great, this is what you applied for, let's get it going. It's really going to be, let's talk about your goals. Let's talk about where you want to be, and not just right now, but where are you in the next several years, and really let us be the consultant to help show you all your options, and show you what's out there that can achieve your goals.
Yeah, that's good. That's good. And I mean, in your experience, what are some common questions that that you get from your clients?
Oh gosh, most recently it's rates, right?
Oh yeah, for sure. Yeah.
What's happening with rates? I think people come in, and I think home ownership. How can I obtain a home? How can I afford this? How can I get a plan going? And we love those questions. We love to get people into home ownership, and I think that some people might be ready right now, and it's showing them a plan and how we're going to get them there. And others, it might be 3 or 4 years down the line. But it's showing them what that's going to look like, and how to get them on that right path, and how to get them on a plan that's going to achieve that home ownership. I think recently with market rents where they are, a lot of people are coming in saying, how can I buy a home? Because I'm paying somebody else's mortgage right now, right? And I want to be contributing to myself. So I think that's a big one that we get. Another question with the rate shift that's happened is, tell me about products. So I think everybody used to just kind of divert right to a fixed rate mortgage, and now with rates where they are, and people not staying in homes more than 5 to 10 years, or whatever the case might be, they're really wanting to learn about adjustable rate mortgages and other options. So talking about products is a big one for us.
Nice. Okay, that's good to know. And then so I don't know if this is the question, but this is a question I would have if I was that person that's walking into the office. Where do you see the market going in 2023? Like, what is that? What is 2020? If you had, I'm blessing you with a crystal ball. You have all this magical power. Where do you see in 2023?
That's funny. I always answer with my crystal ball is broken.
Right.
I think there's two sides. I think no matter who you talk to, some are saying rates are going to come down, some are saying rates are going to go up, and I think it's moving away from the rate discussion and really understanding what options are for the current situation that we're in. So I think as we've seen in the latter half of 22, I think going into 2023, it's really going to be product options to keep buyers in a market. Adjustable rate mortgages have really been able to keep buyers in the market and being able to purchase those homes that they've been looking for, where I think they felt priced out in the beginning. And as they get more educated on product options, I think it really helps. We have a 5.5 no closing cost option, for example. So it's an adjustable rate mortgage. It covers the closing cost. And when you put that mix of, I don't want to call it higher rates because rates are still amazing, but with the increase in rates that we've seen and sales prices where they are, it's a great combination if you can get some help on closing cost and lower products. So I think really, or lower rates. So I think it's really going to be about product mix. I think sales prices are softening. I don't think we're going to see a big dip, but I think it's that overbidding, right? It's those multiple bids that we're pricing people out of the market that we're seeing soften a little bit, and I think we'll see that continue. Okay. Other than that, I think it's just about products and how we can keep people getting into homes.
Yeah, no, that's fair. That's fair. Now, I think you mentioned a little bit earlier about relationships. So can you kind of explain from your perspective, the importance of the relationship between me and you, a realtor and a lender? Like, why is that important? Why does the client know that we're a team? And what's your take on the importance of that relationship?
I can't say enough how important it is. And I think that a lot of real estate agents have established relationships with lenders, and I think that that's a win, that's a plus. But by no means can that, should that take away from the fact that there's new relationships to be built. I think it's all built on confidence. I think making sure that there's open communication is key. Constant communication is key. I think everybody's there to get the job done and get the close of escrow done on time, make it a smooth and easy process, educate along the way. But I think it's pivotal. It's such an important component, and I think that if there isn't that connection or if there isn't that relationship, the home buyer is going to feel that, right? Yeah. So you want that synergy all the way around, so that the home buyer feels taken care of on both sides. Everybody's in the same loop. Close of escrows are happening, and I think ultimately the real estate agent has to have confidence in their lender to be able to submit those offers, right? To be able to fight for that home buyer if there's any kind of bidding war going on, right, or multiple offers. So I think it's very important.
Yeah, I love it. And then I think the viewers that are going to watch this, I think hopefully those are the ones that are looking to learn something that they didn't know, maybe even call you because of something that they're thinking through. But ultimately, hopefully they're looking to build their real estate portfolio or figure out how they can build wealth. So what would be some advice you would give to either a first-time home buyer or someone that is just looking to increase their real estate portfolio? What would Laureen tell them?
What would Laureen tell them? For first-time home buyers, definitely let's do the homework ahead of time. Mm-hmm. Run through numbers, run through scenarios, and really make sure it's a big undertaking. It's exciting and it's awesome, and it's a wonderful next step for financial wealth, right? Financial health. But I think making sure that you're prepared. That you really understand the process, you really understand what you're getting into, and making sure that we get people pre-approved within limits of where they're comfortable, and then talking about, okay, so if you want to exceed, if that offer, if you want to go up a little bit higher, what's that going to look like for you? I think in all my 30 years, I've always joked around that it's one thing to say, I want to buy this house and I'm going to get a raise and I can get roommates and I can do this and I can do that. Now you marry that house. You want to be able to have that weekend barbecue. You want to have your friends over, right? You want to be able to afford those repairs that come up. So I think it's really trying to be able to help communicate balance to first-time home buyers to make sure that they're still comfortable and they can still live life while they purchase this home. So I think there's kind of an education process around it. With people expanding their real estate portfolio, that's so exciting, and I think, again, it kind of falls on the same idea that you want to make sure you're taking on additional properties. We educate to vacancy factors, repairs that are going to come up, making sure that you have ample reserves to be able to handle those situations so you don't get in any type of, situation. And then I think the other thing is really understanding market movement. So are you buying at the height of a market? Are you buying at a good time? making sure that you understand if you do need to exit a property, what is that going to look like, and are you going to have enough equity to do so? So I think it's a big education process, but I think it's just making sure that people are set up for success and really working with individual goals.
Yeah, that's good. I was gonna ask, as it relates to first-time home buyers, what would you say, like, if someone's looking to buy next year, or even 2024, 2025, how soon should they talk to you? How soon should they reach out, right? What would be your recommendation? Yesterday.
No, truly, I think that so many people are intimidated to come talk to a lender. It's like, I'm not ready, or I can't even afford it. And I don't even think that that's always the case. I think you might have a mindset of that, but with what you're paying with market rents, let's talk about it. If we can help you, source down payments, right? There's grant programs, there's family members, there's all sorts of different avenues that you can take. I think getting in and talking to somebody as soon as possible, so you at least know what you can do, or if it is a 2 or 3 year process, like you said, is it 2025? Well, let's get you set up on a plan of what it's going to take. So truly, I don't think it's ever too early. And it's just finding that loan officer or that lender that's going to spend the time and help you create that plan. But you might be sooner than you know it, and you might have a 2 or 3 year plan, and we'll help you through it.
For sure. And so what are some things that you'd like to share that can potentially inspire some people to build wealth through real estate? Oh,
goodness gracious. I think, again, being able to obtain homeownership, it's a lifelong dream, right? It's what everybody wants to do, and it definitely creates financial wealth, financial health if you do it properly. I think understanding that investing in a home is something that, as time goes on, it's generational wealth, right? Whether you have children, family, friends, you can leave that to somebody. I mean, what a gift that can be. I think really understanding your equity position and utilization of it. You had mentioned earlier, about paying your loan off or refinancing. And I think financial wealth, you can utilize, access to funds at really low interest rates compared to consumer loans or even often business loans, right? And be able to create additional financial wealth or financial, I guess you call it sturdiness, right? Strength within your real estate portfolio or your financial portfolio. But yeah, I think being able to understand your equity utilization and the benefits of homeownership, how you can pass that down to somebody, being able to use your equity moderately for other adventures.
No, that's good. I think that's awesome. Is there anything else that you want to add, share, or just leave for the folks that are listening before we let you go?
I think I could talk forever.
Yeah.
I think when you talk about the lender and the broker situation, I think really making sure that you have a connection and you have trust and you have a partnership, I think is key. One of the things that, local lenders, I think there's a difference with lenders, right? There's nationwide lenders, there's local lenders, there's community-based lenders. And I think we've seen a lot of hard times over the last several years. Here in Sonoma County, we've seen fires, we've seen, all sorts of things, right? And those community lenders will be there for you. And I think that you'd ask, why choose a lender? I think really making sure that you've got somebody that's going to be there for you for this transaction, but also for the life of that loan. RCU, for instance, we, in 2019, when rates started to decrease, rather than everybody having to go out and refinance, go through the whole process to refinance, we created what's called a rate roll down. And it'll be really beneficial. You talked about what we see in 2023. I think when people are getting into homes and they're a little uncertain on rates, they know rates will come back down, right? It's very cyclical, 3 to 5 years or so. They'll be refinancing. Certain lenders, RCU per se, we have a rate roll down where if rates come down, you literally just do a rate roll down option. You skip the whole refinance process. You get to take advantage of market rates on our portfolio products. So as long as it's a product that we hold in-house, that's one of the benefits to using a community type lender, that there's special programs, right? They'll take care of you, they'll work with you when you have challenges. And I think that's something you definitely want to research when you're looking at who's going to do that loan for you, is, where are they going to be if you need them down the line. So just some examples there. But other than that, no, I think people need to come in and get pre-approved and find out what it's all about, not be intimidated, and find somebody they're comfortable with.
And don't wait, right?
And don't wait. No.
Show up yesterday.
Yeah. Show up yesterday, I'm telling you. Show up yesterday.
I love it. And I mean, lastly, where can they find you? This would be the time to kind of give your whatever information that you want to give them. No
Sure.
pressure, but your phone number, Instagram, whatever you have. I don't know what.
No pressure.
Yeah.
Redwood Credit Union, and we are in the North Bay. We serve the North Bay, and we are member-based, so we are there for our members. And yeah, you can, Laureen Barnes, so you can go ahead and email me if you'd like, lbarnes, B-A-R-N-E-S, @redwoodcu.org. Any question is acceptable, and if you're looking to get pre-approved, whatever the case might be, we have a wonderful team. We have purchase loan experts, we've got refinance experts, we've got a really fabulous team that really works for our members, so yeah.
Well, thanks for coming on. I mean, your knowledge is great, and it's actually the first time we met, so it's great meeting you this way, and I guess tell your wealth of knowledge, so your time is valuable, so thank you for coming in.
Absolutely.
I appreciate it.
Thanks for having me and for the opportunity. I appreciate it greatly.
Of course. Nice to meet you.
Nice to meet you as well.